Good morning, ladies and gentlemen. My name is Perry Davis, and I'm from Training and Technical Assistance Services at Western Kentucky University. This morning, I am honored to come before you to do a presentation on the Head Start Fiscal Integrity Protocol. We've designed this training especially for the grantee and the delegate agencies for the city of Chicago. So what we would like is for you to actually participate in the webinar by, if there are any questions on the part of your sales, typing your questions in terms of the program, and we'll, at the end of the presentation, we'll respond to any questions that you may have. As you are aware, the City of Chicago will be, during this fiscal year, monitored by the Office of Head Start. And this is a triennial monitoring that occurs once every 3 years from the Office of Head Start. This year is a very important monitoring year because it's the first monitoring that the city will incur under the new system of designation renewal. And the system, of course, you are aware of, is designed to determine that programs are providing the highest level of quality of services that are being responsible for the resources from the federal government. So in order to ensure that your program is providing consistent information, we got together with the powers to be here in the city and decided to put together this presentation on the Office of Head Start Integrity Monitoring Protocol. This presentation is specifically designed to provide each of you with a list of records and reports that will be necessary for your organization to be prepared for the fiscal monitoring protocol. We have looked at the protocol, and we went through each one of the sections, and I'll talk about the sections in just a few minutes. And we've determined the actual records and reports that would be needed in order to provide the monitor with evidence that the protocol, that you have documents consistent with the requirements of that section of the protocol. So before later on today, a copy of the PowerPoint presentation, of course, will be made available to each of you in order for you to follow the presentation. Also, we will make available another document, which is a form that is consistent with the Office of Head Start's monitoring protocol, fiscal protocol, that identifies specifically the records and reports for each section that will need to be available for this very, very important monitoring process. So with that in mind, I want to take just a few minutes to kind of go through each one of them to give you an idea of what the requirements. Oh, I'm sorry. Yeah. Okay. I want to give you a brief introduction of the fiscal protocol before we get into the actual questions and the documents and records that are going to be needed in order to be in compliance. The protocol is designed to ensure that Head Start performance standards and federal resources are used appropriately in terms of making sure that every grantee agency is complying with the Head Start performance standards, and that the resources used for compliance with the Head Start performance standards are being used according to the federal cost principles and other regulations. The intent here of this integrity protocol is to ensure that you have sound internal controls. We'll be talking about those as we go throughout the training. That you have a very strong reporting system, and that the federal resources are used for the intended purposes. Now, we all know that each of you are required to submit reports on a monthly basis to the grantee to ensure that your services are compliant with what was provided so that you can be reimbursed. This process will be tested as a result of the implementation of this protocol. In addition, the protocol monitoring process is to ensure that the Office of Head Start is better able to ensure that the overarching of the goals of the Head Start program are met in a manner that's going to ensure high quality services to children and families. And certainly that what the intent is that the resources specifically outlined for services in the Head Start program, that those resources are being used for that purpose and solely for that purpose only. So with that in mind, you will probably experience something a little differently from how maybe the monitoring process occurs or the auditing process occurs from the city. The Office of Head Start primarily will only be looking at resources used in the provision of Head Start and early Head Start services. And what I mean by that is that whatever resources in your application for funding that you submitted to the grantee and also in your contract that's specifically for Head Start and early Head Start needs to be clearly identifiable in a manner that you're using them according to what was approved in your approved application as well as your approved budgets from the City of Chicago. And as you go through the presentation, you'll see the whole focus that we'll be talking about this morning. We'll primarily be looking at how those records and how those reports will support what you're doing in terms of making sure that you use those services appropriately. Now, the Office of Head Start Fiscal Monitoring Protocol for 2014, it has 6 sections. We'll go through each one of the sections and we'll talk about the importance in terms of the expectations that you will be expected of you in terms of compliance in each section, and we'll also, again, as we said, talk about the reports. Now, the first section of the protocol is called the Financial Management Systems. This section is the overarching section in terms of what have you put in place to ensure that the grant requirements as well as the contractual requirements from the city are being met consistent with the requirements of the federal standards. In this particular section, they will be testing the following areas. As you can see on the screen, they'll be testing your financial reporting. They'll be looking at the financial reporting from the perspective of how you report your financial resources to the city. They'll also be testing your financial reporting from the perspective of how you provide reports to your policy committee and at the grantee level policy council, your governing body, as well as your management team, so that they can have the type of information to ensure that the cost objectives on the financial side are being met. They'll also be testing what they call your accounting records, and this is really where it comes down to the source records for all the resources that you will be required to utilize in the provision of the Head Start program. They will look at the accounting records to ensure that there's adequate source documentation to support what you've received in terms of your contractual requirements for Head Start, and also the source records to support the disbursement or the expenditure of the resources from the Head Start program for those services needed in order to provide services to children and families. They will take the 2 systems in terms of reporting and records, and you'll see here that the financial reporting system will be greatly impacted by the accounting records, because the expectations are that whatever you report financially, that the accounting records will be there to support that particular source or that particular report that's being provided for. So there's a direct relationship between the reporting requirements and the accounting records, and the expectation is that they will reconcile, because reports are just simply aggregations of data that's contained in the accounting records. They'll also test your internal controls. You are required by the Head Start program, and not just the Head Start program, but based on the administrative requirements for the Head Start program, to develop internal controls. We'll talk a little bit more about that in a few minutes in terms of the expectations of internal controls, but your fiscal policies and procedures will be evaluated to determine whether or not you have developed the appropriate internal controls that's necessary to manage your contract from the delegate agency's perspective and, of course, the grantee from the grantee's perspective. You'll also be expected to have systems in place for budget controls, and that is that whenever your budget is being implemented for the program of Head Start and Early Head Start, that the systems will provide for the only costs that have been included in the budget will be obligated and expensed against the budget, and that you created a system where the no cost that is not included in the budget will be charged to the program in terms of the budget. You'll be expected to comply with the cost principles of your particular organization. There are 5 different sets of cost principles depending on your type of organization. The set of cost principles that are applicable to your organization will be evaluated based on the type of organization that you operate. So be mindful of the fact that this system will be tested as part of the requirements for the program. They'll also test your cash management procedures in terms of making sure that the cash that you have received in terms of your reimbursement from the city, that on the revenue side of your program, that the resources are there to ensure that the documentation is there to ensure that that cash is being used solely for the intended purpose of Head Start and or the Early Head Start program. They also test your administrative costs. In your contract, you do have limitations on administrative costs, so they will be expecting to see records in your program, as we'll see a little bit later on, that tells them how you develop your administrative costs. They'll be expecting to see records to show how the administrative cost is being used, and also the financial reporting requirements to give them an indication as to whether or not the administrative cost is being properly tracked throughout the course of the period. So let's get into the first compliance measure. Again, there are 6, and this is section 1, which is the financial management system. Now, the compliance measure, as you can see on the screen, is the overarching statement that determines whether or not a program has met the requirements for compliance. And what we're doing here, we are not actually going through the questions in the protocols. We are going through the materials that are going to be needed to provide evidence that the response to the information in the protocol is accurate. Now, what you're going to notice if you look at a copy of the protocol, and I'm sure all of you have a copy of it, in the Fiscal Integrity Protocol in 2014, there's only 3 sections that contain what we call interview questions. About 95% of the information required to be in a situation to be in compliance with the Fiscal Protocol is coming directly from records and reports. And that's what this training is to provide you with a structure to hopefully ensure that that each of you as an organization will have the necessary records and reports that would be needed in order to effectively be carrying out the program according to the Fiscal Protocol. So what we've done here is you're going to notice here we've got sections here, and on each one of the questions there will be alphabetical sections that will look at records and reports needed in that particular section. So we wanted to give you a tool to kind of guide you that would be consistent with the protocol, so that we'd have section, for example, in section 1.1, you know exactly what records and reports would be needed in order to comply with the requirements of evidence-based documentation for that particular section. Section 1.2, as you'll see, 1.3, and so forth and so on as we go through the process. Okay, so we started out here with section 1.1, which is the compliance measure says the grantee's financial management systems provides for effective control over and accountability for grant, sub-grant funds, property, and other assets, and ensure that they are used solely for authorized purposes. And so based on what they're asking us in terms of the documents and the interview questions, we've created a list of records and reports from that protocol that would be needed. Now, because this is the financial management system, we determined that the first document that would be needed would be your fiscal manual. And as you notice on the screen, you'll see fiscal manual, and you'll see number 1, and you see a list of information containing in that fiscal manual. Now, the fiscal manual is supposed to include the policies and procedures that will allow for a staff person to implement in order to carry out the requirements of, in your case, the sub-grant, which your delegate agency is, and the grantee would be the grant. So at a minimum, the Fiscal Policies and Procedures Manual will include policies and procedures for the following areas. And I'm going to go through them. Now, if you notice to the left of each one of those areas, they're not numbered. We did that for a reason, simply because there's no quote-unquote numerical structure for the fiscal policies and procedures. However, I do want to inform you that the content is very consistent, that what we've listed here should be what's included in your fiscal policies and procedures in terms of your manual. Again, as we said a few minutes ago when we were talking about the introduction of the section, financial reports are critical to be identified for the Head Start program, and I do want to make sure I reemphasize the point that we're talking about the element of the fiscal manual that deals with Head Start and early Head Start. Some of you, perhaps, who have multiple programs, it may be necessary, and quote the term, may be necessary for some maybe some adjustments to be made in your fiscal policies and procedures to ensure that the Head Start areas are met in terms of having systems in place to ensure that those services are being provided appropriately. So you may have little addendums to some of your sections of your fiscal policies and procedures simply because the Head Start program may require you to have something in place that your organization currently doesn't have, simply because that the other grants or contracts or whatever you have agreements may not require it and Head Start do. So keep that in mind as you look at that. But in terms of what the fiscal manual would be expected to look like in terms of Head Start, we would expect to see that there would be financial reports made available, the frequency in terms of how frequent the reports are provided, and also the type of reports that would be necessary in order for the program to financially report information consistent with the contract for the Head Start and Early Head Start program. And by the way, the financial reports will include, again, all funds used in the provision of Head Start and Early Head Start services. And that does include USDA and non-federal share. And of course, again, the accounting records, you want to make sure that there's records for everything that you do in terms of providing a service. You want to make absolutely sure that the system for record retention is included and access to those records in terms of what you do in your organization to allow individuals to access the records. You want to make sure that there is a system in place for budget control, and that budget control system does allow for your budget development process and activities that you go through in developing your budget, as well as when it's necessary to make amendments to the budget throughout the course of the year, because these throughout the protocol will be tested. The internal controls. There are 5 components of internal controls that's described in the COSO report, and they are control environment, risk assessment, control activities, information and communication, and monitoring activities. Because the federal government has adapted the COSO report as their framework for internal controls, and certainly your fiscal policies and procedures need to have addressed those 5 components in terms of what you have in place in your internal controls. Cash management. You want to make sure, because Head Start has 2 sides of how they account for the services or the resources. One, of course, is the expenditures, and the other one, of course, is the cash that you receive for the expenditures. And certainly in your case, because you are reimbursed based on your disbursements of your cash, you want to make absolutely sure that that your fiscal manual addresses the receipt and disbursements of cash, so that when you submit your vouchers to the grantee agency, that you are submitting the vouchers consistent with the cash dispersed for services in the Head Start program. If you have credit cards, certainly you want to make sure that the credit cards are addressed under the cash management procedures, certainly from the perspective that if you're using a credit card in lieu of cash, certainly you want to make sure that they are addressed in those areas also. The next test is the allowability, allocability, and reasonableness of costs, policies, and procedures in the fiscal manual. And certainly you want to make sure that they are there, because all costs are supposed to be tested. That's going to be charged whole or in part to federal and non-federal for those 3 tests, and you want to make sure you have a system in place. I do caution you about that particular piece, and from my experience in working with many organizations, they have elected to just repeat what the regulations say and not draft policies and procedures that specifically say what the organization will do to ensure the test is met, and that's what the monitoring process will be testing. They will not be testing whether or not the policies and procedures repeat what's in the regulations, but they'll be looking more so to test what your organization has established to ensure that those policies and those regulations are met in terms of the activities that you do perform. And certainly you want to make sure that the administrative cost is addressed too, because that has to be tested just like the direct cost or the program cost of the program. The other thing, the next piece of the accounting manual that, of course, is going to be looked at is the chart of accounts, the account codes that address the different types of resources for the programs, to the program costs, to the budget categories, to the allocations, of course, your revenue codes, your expenditure codes, your asset, liability, and even the unallowable codes in the event that there is a code that's, a cost that's unallowable that's posted to the contract or your budget. So when that cost is then went back and adjusted, that it is adjusted and posted to the correct unallowable code that you've created within the Head Start or the Early Head Start program or budget. Okay, procurement procedures. Certainly you want to make sure that you follow your written procurement procedures and that the fiscal manual clearly outlines the step-by-step procedures that you will follow, including the code of conduct, your contract administration, and of course your equipment disposal if that's something that's going to be needed to dispose of equipment that maybe has been determined as necessary through your equipment inventory. The compensation policy, you are supposed to have a policy on compensation that addresses salaries and fringe benefits. If you include incentive pay or bonus pay, if applicable, and that's only if applicable, then of course the compensation policy would need to also address those particular areas. Your payroll policies and procedures, of course, will be looked at very closely to make sure that employees are recording their time and that they're being properly approved consistent with your payroll policies and procedures, and that the payroll, of course, has been approved consistent by the policies in terms of a responsible official approving the payroll. So they'll look at those things to determine if the procedures are in place, and then they'll begin to look at the records that's necessary in order to support those procedures. Of course, if you use a journal entry system, which most of us do because we either record transactions to a journal entries or we make corrections or errors through a journal entry, they'll be looking for those policies and procedures, the approval procedures consistent with those to ensure that the journal entries are appropriately being carried out. If they're not a part of your fiscal manual, you want to make sure that they're somewhere in the area around the fiscal manual. They'll be looking at procedures for valuation. They don't like to see value of non-federal shares in terms of goods and services and space not have a basis for the evaluation. So certainly they'll be looking at those procedures, how you value your non-federal share. For example, your volunteer services, of course, if they are services that are found are consistent with those employees in the program, then the value should be consistent, very consistent with those. If the services are not found in the program and they're being provided to a volunteer, by a volunteer, then of course then you're looking at maybe the wage comparability study or some other document that's going to be necessary. And space is either going to be, again, depreciation or use allowance, or it's going to be an appraisal to determine the value of the space. So you need procedures from the non-federal share side to ensure that those are done. They'll also be looking at the procedures that you have in place for obligating costs. And this is one of the other internal control pieces, because all costs that are being charged whole or in part to the Head Start and or Early Head Start contract must be first obligated. That says that someone has approved the cost to occur, and that the person or persons that are carrying out the activities to incur the cost are doing it consistent with the obligation. They'll be looking to see what's in place systematically within your fiscal policies and procedures to obligate costs, and of course to post the cost to the accounting system so that it can actually be accounted for. They'll look at your equipment management procedures. in course, including the records. The procedures need to address the records. We'll look at some of those a little bit later on and what will be contained in those records. We'll also look at inventory in terms of how often the inventory is done by your organization based on your procedures. And we'll also be tested whether or not you are doing a reconciliation between your property records and your inventories according to the policies and procedures. Now, staying in this very first section, we done got the bigger picture here in terms of the policies and procedures. Now I want to look at some of the records and reports that are going to be required. And as you can notice on the screen, that in the block that says Section B and Section C, it says records, it says current and prior year records, and then in Section C it says reports, current and prior year reports. That will be the theme throughout. And the reason for that is that the current and prior year records and reports are going to be at your fingertips. In other words, I'm not sure of the records we're going to have listed here, how many of them will actually be uploaded to your data bank, how many of them will be on hand, but certainly the first 2 years, complete years of records, current and prior year, will be at your fingertips. Now, year 3, because the monitoring can go back 3 years, because they were here 3 years ago. Year 3 will be available. Current and prior year at your fingertips. That means they are just easily touched. You can feel them. They are tangible. They're there. You can just go get them, and everything is there for them to have. And, of course, the third year will be available, which means within, I'm going to say within a 2-minute period, those third-year records can also be made available. Because the review they can ask for information all the way back since the prior monitoring. So we just want to make sure that we have the information available, so it will be a very, very smooth and simple process, and make sure that we have everything needed in order to carry it out efficiently and effectively. Okay, now I want to go through Section B and C, and I'm kind of going to go from side to side here. In some cases I'll just go straight down the list, and then I'll come back and go to the other side of this slide, which will be the Section C. But in this section here, we have some documents that we listed that we determined based on the questions in the section, the targeted questions that would be necessary for you to answer this particular questions. And the first question here is the agency's audit, including the management letter, if applicable. Certainly, of course, again, keeping the theme that you'll have at least 2 years available and the third year at your fingertip. We want to keep that theme throughout the entire process because that's consistent. So certainly if your agency issued, of course you had your audit, if that's applicable, and your auditor issued you a management letter, those records would need to be available in order for the reviewer to have an opportunity to review. Some of the other documents that will be evaluated in this particular section will be your claim for reimbursements or your vouchering forms, which also include support documentation. And we define support documentation a little bit later on. You'll see on the records and report as the general ledger report that supports the reimbursement that you are requesting for submission. Now, here's the real deal when it comes to claims for reimbursement of vouchers. If your accounting system is not set up consistent with the reimbursement process, then you need to show documentation of how you got the information from the system and included it on the voucher. In other words, there may be another set of reconciliation or reports that you've done in order to align what's required of you to receive your reimbursement with what's in the accounting system. But certainly they do want to see the information coming out of your general ledger reports that's being used for submission of your reimbursement. Of course, in this area, they'll be looking at records of your bank statements. I don't think the city gives advances for payments. Some organizations in other cities, not here in the city of Chicago, I don't think that happens, but since this presentation is a nationwide presentation, we included that. Now, when it comes to the audit, the corrective action plan, if you have had audit findings or if you've had concerns or recommendations in the management letter from your audit, there should be the following information. It should be a corrective action plan that outlines exactly what you've done and that should be records that support the activities that's included in the corrective action plan. So if you've had to do a corrective action plan because you had an audit finding or you had a concern or recommendation in the management letter of the audit, then you're expected to do a corrective action plan and have the documentation to support the corrective action plan. Now, you can refer to section, we did include here the section of the OMB requirements. You can refer to section audit requirements, OMBA 133.315 A and C will give you very specific information on the contents of the corrective action plan that will need to be implemented if your audit includes findings and or in the management letter recommendations or concerns. Also, you are required by OMBA 133 to do what we call a summary schedule. And the records ought to be very clear of that. And the summary schedule is a result of having an audit finding in a prior audit period. So if in 2011 you had an audit finding in 2012 upon completion of the corrective action plan from 2011, you would do a summary schedule consistent with A133-315 section A and B. And that's to give the auditor the next year the records to show that you properly addressed the finding or the finding is still in process or whatever is necessary in order to make sure that that particular finding has been eliminated. Certainly you want to make sure that you have available corrective action plan monitoring records where if you've had corrective actions done as a result of the audit, certainly you want to make sure that the records that you have actually monitored those activities to ensure that they have been completed, that information is going to be made available to the monitor also. On the report side at the top of here, in the second column, you'll see it says monitoring reports to policy council, committee, and governing body. Most corrective action plans are not completed within a 1-week period. It takes time because of what you have to do in order to correct those findings. If that's the case, you have to keep your policy council, your policy committee, and your governing body aware of the progress. So the reports that are provided based on what you've done during a given period of time would be the reports that will be necessary in order to provide to those particular groups to ensure that the corrective action plan is being carried out. Some of the other records here in this particular section that you'll be asked to have available, either the grantee or the delegate agency. Now, the very first one here says delegate agency listing. Of course, that's a grantee report. The delegate contract, you will have that as well as the grantee. Certainly, if there are procedures for credit cards, that will hopefully be inclusive in the section that's going to deal with the fiscal policies and procedures, that you are following those policies and procedures. The records that deal with taxes from the Internal Revenue Services, state, workman comp, etc., of course, and that documentation, of course, would need to be made available. And of course, the grantee will have information on whether audit findings have been followed up on according to the process in which they are being followed up. You want to make absolutely sure that your records of accrued leave and the funds used to cover the leave is available, and particularly when it comes to looking at the leave in the Head Start. It's applicable to the Head Start and Early Head Start program. So again, I want to reemphasize the fact that the point that we talked about earlier is that this review may not be it may be a tunnel vision type review where the segregation of the activities between what's going on in the Head Start and Early Head Start and your other programs may be a need to ensure that that's done simply because they are going to focus on Head Start and Early Head Start. So if the leave is from the broader agency perspective, make sure that the records reflect the leave that's applicable to those staff if this is something that your organization does. Now I want to look at the other part of the section here in the records, and it has to do with staffing and the financial management system. This particular area has a direct link to your audit findings, and the normal wisdom is that if there's audit findings, something is done to address the findings. Generally, what happens here is That could be a change with staff. The financial management system has been modified to support that audit issue that had occurred during that particular audit period. So if that's the case, you want to be able to show some of the following documents. So if you had an audit finding, and the audit finding led to some situations where staff changes, there were changes made to staff, and or there was changes made to your financial management system, you want to have all the information here available as listed. You want to make sure you have the revised policies and procedures if that had to occur as a result of the audit. You want to ensure that records report the necessary training if that was necessary as a result of the audit findings. If you hired new staff because of the audit findings, certainly the records need to support that. If you change the accounting system, you made changes to the current, or you decided to procure for a new accounting system, certainly you need to have those in place. And of course, if there were changes to the organizational structure as a result of the audit findings or management level concerns, then certainly you want to have the records. The key here, ladies and gentlemen, that are participating, is that we want to have as much information available so that we minimize the opportunity for the reviewer to have to ask us for information that certainly should be made available. And we tried our best in this particular instance to make sure that we dealt with as much of the information that we had in terms of what's going to be required. You're going to have, we already talked about that, systems and procedures for payments to the delegate agencies, and that's normally going to be the grantee. And again, the grantee is processing of the systems, processing of the payments to the delegate agencies. Systems for procedures for leave accruals, that may be in fiscal or it may be in human resources. So it just depends on how you accrue the leave, whether the system is explained in your fiscal policies and procedures or the system is explained in your human resources. If so, you probably need to have those available so the reviewer will have the opportunity to address those. But certainly if the leave payments owed to its employees, that becomes a fiscal issue, and that system should be addressed in your fiscal policies and procedures. If you are accruing leave and that leave is accrued for the Head Start program staff that's involved in your organization. Records that identify funds used to pay vested leave. In other words, what records have you recorded or maintained throughout the organization that shows the resources are available to pay that leave, and the funding source, of course, that identifies how much and how the leave would be accrued, received during that period. And we want to continue our discussion about the records and reports under Section 1 of the Financial Management System. Records used to pay the delegate agency contracted vendors, including vouchers, invoices, purchase orders, and cleared checks. And it just goes on to list some of the records here, and of course then the reports that are provided for that information throughout the course of the year would need to be available. And keep it in mind, I do want to keep it the sentence of the line up there that says current and prior year records, and certainly you want to make sure that those are available. You will need a copy of your organizational structure, including your fiscal staff. You'll also need a listing of the name and the title of your fiscal staff. You will need to identify the experience and education level of your fiscal staff, and anyone who's been assigned financial responsibilities. So if there's a staff person who is, because you are a smaller organization that's also fulfilling, carrying out fiscal responsibilities, and they are identified as part of your internal control, as part of your financial unit, you want to make absolutely sure that you have the experience and education level of those staff also. And that's probably going to be on the human resources side. Just want to make you aware of it in case that it's asked for, that human resources can have this information available. And the other records here under this area that's going to assist us in identifying the capacity of the staff, of course, are the job descriptions of the fiscal staff with the financial responsibilities clearly identified. And that, again, perhaps is going to be in the human resources, so you want to make sure that those are available. You want to make sure that the policies and procedures, and you notice here they reference back to Section 1.1A1, which is the fiscal policies and procedures, that those policies and procedures describe the segregation of duties from the entire fiscal unit, not just the bigger unit organizations, but if you are a one-man shop, a one-man shop has to have segregation of duties just like an organization with multiple staff. So you want to make sure that those policies and procedures address both the smaller organizations as well as the larger ones. Okay, some of the other records here are the records of age payables. There's a set of questions in the protocol that address payables. You want to make sure that you have the records of all your age payables, and you also want to be able to provide reports that show the aged payables by date. Of course, you notice here less than 30 days, anywhere from 31 to 60 days, and 61 to 90 days. Now, I do caution you about the reports in terms of anything outside of what would be less than 30 days, that it would probably be in your best interest to attach some kind of documentation to say why this particular payment is greater than 30 days and or greater than 61 to 90 days, of course. So it helps the process go a lot smoother when you provide the reviewer with the explanation, as opposed to him having to ask you why is this payable outstanding between 31 and 60 days. You've already done that and attached it to your age payable report. It makes it easier for the process to occur. Again, also they'll be looking at your monthly bank statements, those records. They'll be looking at your monthly general ledger reports of your revenue from Head Start and Early Head Start. We know that once you receive your reimbursement from the city, that you then post it to your Head Start general ledger as revenue. And of course, it has to also then be dispersed back to your organization for the purposes of paying the organization for those costs that they incurred for managing the Head Start program. They will be looking for a very, very specific bank statement reconciliation to the general ledger. And I want to be very clear about that. The expectations is that there will be a bank statement that shows all the revenue received, and and the checks and all that have occurred clear during the period. And there'll be a general ledger on the revenue side that will show a reconciliation between the two. And this particular report is not about expenditures. It's specifically about, from the general ledger's perspective, revenue being received by the organization and dispersed that's going to reconcile to the appropriate bank statement. So you need to have a very clear and concise reconciliation of the bank statement to the general ledger that shows that the revenue received does reconcile to what was posted to your account, bank account, for that particular period of time. There's some questions on the protocol that deals with administrative costs. This section here of records will assist you in providing for that type of information. So they will be asking you for records that show how you developed the administrative costs for the budget. How did you determine what costs would be administration, those records versus those records that says, of course, those are costs will be program costs. In addition, here in number 5 in that section, they will also ask you to provide records as you disperse or expense administrative costs that shows, what's administration versus program. So the first set of records deal with the development of the budget in terms of the administrative costs. Those records must be available. And the second one, set of requirements or records here in Section 5 will address tracking as you go throughout the expenditure period, throughout the grant or the contract period, what records support the administrative costs that has been charged to the Head Start program for reimbursement. And on the opposite side over there, you'll also see reports. The grant application budget instrument does contain a report called a GABI detail report that identifies the development and administrative costs that by your organization that was submitted to the Office of Head Start. And that's a very good report, because if any portion of the administrative costs that's that's non-federal share was included, this report will include that information also. So it's going to be important that you have some, maybe have a copy of that report to make sure that we've set up our administrative costs appropriate in our accounting system based on the report. And then, of course, your monthly financial reports that will identify the expenditures that have been made against the administrative costs. And those monthly financial reports should include a couple things: the actual expenditures, as well as the percentage of administrative costs based on the contract that you have expended at that particular point in time. So not just the report of the expenditures, but also the percentage in terms of where we are. So if I'm, for example, after 3 months into the program year, I'm at 4% of my administrative costs that I'm required to have, the report will indicate such information. The next piece in this section is Section J on the records. The next piece deals with records and reports that show payments were dispersed. This section is dealing with the actual disbursement of funding, not expenditures. And if you notice here, it says, i.e. check signed and issued to the payee. So the records here that are going to be needed by you are going to be the records to show that the checks were issued to the payee. That means they were signed, and then they have been sufficiently dispersed to the individuals who have provided the goods and services or who are being compensated for working in the program. So your record system needs to not only address, how you cut the checks, sign the checks, but also the disbursement of those checks. Again, policies and procedures that we'll reference in terms of purchase order, vendor payments will all be referenced in Section 1A1 of the program. Davis-Bacon. If you had a project that met the threshold of Davis-Bacon, perhaps repairs, construction, renovation contracts issued of $2,000 or greater, you will need the following information available. You will need the contracts itself. You'll need the contractor's payroll, which is a WH-347 or equivalent. I'm not sure what your contract requires. And you'll need the U.S. Department of Labor's prevailing wages for that project. And the reason that you'll need that is because the Department of Labor's prevailing wage rates, they do change throughout the course of a period. So if we're talking about a project from 2012 versus a project today, the prevailing wage rate during the time the project was enacted in 2012 may be different from the prevailing wage rate of the project today. So you want to make sure that you have those three set of documents available pertaining to Davis-Bacon. And Davis-Bacon does include repairs, construction, and renovation contracts. So if the contract exceeds $2,000 or more and you've done repairs, construction, or renovation, you want to make absolutely sure that you have this information available for the reviewer to review as part of this particular process of for the monitoring. Now, in Section 2, we will now begin to look at some of the other areas here. And for most of you, perhaps the delegate agents, this section was probably not going to be applicable. So this is primarily going to be for the grantee in terms of having to do with prior approval. There will be certain things that the delegate agencies may have to request prior approval from the grantee, and the grantee may have to request prior approval from the feds. But primarily the sections that's going to be addressed here are primarily for the grantee's information only. One, of course, they will be expecting to see is the records of the awards, and they do specifically look for one-time supplements for construction and renovation. They will be looking for notices of awards for hiring key staff at the grantee level, and they give you the information here on the folks that they're looking for. They'll be also looking for procurement for equipment with an acquisition cost of $25,000 or more. And from the grantee's perspective, they will also be expecting the grantee to have a monthly financial report that segregates the one-time cost from any continuing program costs or other costs that's associated with it. So from this particular question, it's primarily going to be dealing with what the grantee requires. The next question has to do with risk. It says the grantee obtain and maintain required insurance coverage for risk and liabilities. And certainly they want to make sure that these particular areas are addressed. There are 4 types of certificates that you need to have available, both grantee and the delegate agency in terms of risk. One is your certificate for showing your fidelity bond or employee dishonesty coverage on your officials and employees, with the responsibility to disperse the funds. Make sure that you have the current certificate and that the policy is very clear and you have a copy of the policy. You want to make sure that you have, if available, if applicable, your current certificates of insurance for vehicles purchased using Head Start funds, including the policy. You want to make sure that you have a copy of your insurance certificates for, space or your locations, and that does include donated, leased, or owned space, covering liabilities for accidents on the premises, physical destruction insurance, and flood insurance. So you want to make sure that those are available. And want to point out very clearly here that this does include donated space, leased or owned space by the organization. You want to make sure you have current certificates for transportation liability. If you have any transport vehicles that are used in the transportation of staff, or in the transportation within the Head Start and Early Head Start programs, you want to make sure that they are properly insured, and that does include if you contract any transportation services to a third party. Now, for those organizations of you who are self-insured, and there may be some of you who are, the records need to describe the source of funding and the amount of coverage of self-insurance. So not only do you need a certificate of the self-insured that shows it, that you need to also have the records to support the insurance that is, the amount of the self-insurance and the sources of funding that's going to be used to cover the risk and liability for self-insurance. The next section I want to talk about is reporting. Remember, there are 6 sections to the protocol, and Section 2 is the section that deals with financial reporting. The expectations here is that in this particular indicator, that the program is going to accurately report the source of funds as well as the application of funding. And that's the first big piece here. And the term accurately report is a very important term when it comes to this. So they expect the source of the funding, where you receive the funds from, to be reported accurately, and they expect the application of funds, that you're using those resources based on what's in the source, that they are being reported accurately. As I said earlier, this review will take on a tunnel vision mentality. It will not, from the agency perspective, it's going to look at Head Start and Early Head Start. So whatever system you created to do your reports, you want to make absolutely sure that there is no doubt in terms of the reports being applicable only to the use of the funding in the Head Start and Early Head Start, and not from the broader organization-wide. So you want to make sure that that's done. Now, it will also distinguish in between the allocation of funds for each Head Start award. And what they mean by that is, if you have a Head Start and Early Head Start contract, which that is 2 contracts, the segregation has to be there. Head Start is supposed to be according to the contract used for Head Start. Early Head Start, according to the contract, is required to be used for the Early Head Start program. So the questions that they built into this particular section is there to test this particular area. One other thing I want to make note of here too is that this particular area will test your USDA reimbursement. I know many of you who are delegate agencies may provide Head Start and or Early Head Start and some other source of a program, child care. I think Pre-K for All is some of the other ones that I've seen. But when it comes to the Head Start program, and I know that when you submit your contract to USDA, they send you one contract that says this covers all your kids. But Head Start expects you to take the portion of that reimbursement that's applicable to the kids in Head Start and Early Head Start and provide accurate reports of the use of those funds, only for those children. So you may, again, within your accounting system, may have to take the USDA program and then begin to segregate it by Head Start, Early Head Start, and your other programs in the organization, so that you can effectively account for the reimbursement from the Head Start program and Early Head Start program being used solely for those reasons. So you want to keep that in mind, because this section of the monitoring protocol will also test whether or not your system, your financial management system, has the capacity to perform such functions in a way to ensure that the program is carrying out those responsibilities. Okay, so in this particular area, we're dealing with financial reports and accounting records that they're going to be timely, complete, contain accurate information pertaining to the grant, the sub-grant awards, authorizations, obligations, unobligated balances, assets, liabilities, outlay, total expenditures, income, and interest. And from the grantee's perspective, that the reports include the SF-425 paper report, the SF-425 web-based federal cash transaction report filed to payment management, and the USDA Child and Adult Food Care Program reports that has to be filed with USDA. So what we're going to do is we're going to look at, again, if you notice the screen, we have the same setup here in Section 2 as we did in Section 1. One side of the room, or one side of the slides, we have the records, and we talk about current and prior year, of course, with the third year being available. And then, of course, on the other side, we have the reports that says current and prior year with those records being available. Now, certainly, the first list over here that you see here where it says federal awards, you need to go through and identify what's applicable. For example, the notice of awards for Head Start, of course, that's a grantee document. The sub-award, that's a grantee and a delegate document. USDA contract is, of course, a grantee, excuse me, a delegate agency document. The application for funding, of course, would be both, because the grantee and the delegate would both do an application for funding. And I want you to pay very close attention in your application for funding to your goals and objectives that you've established, because they're beginning to test whether or not resources that have been budgeted for are actually being used to achieve goals and objectives as identified in the application for funding. So pay very close attention. That's why we put in the application for funding with goals and objectives. So certainly we want to make sure that not only you're spending the resources according to all the regulations, but also that the resources that you're using in the provision of services are being used to meet goals and objectives. Again, you want to make sure that you're familiar with the GABI reports, the grant application budget instrument reports. You want to have records of all your amendments to your applications. You want to have your operating budget available for Head Start, Early Head Start, USDA, and your other funds used in the provision of services is applicable. So on the record side, just to get us started with what we need to do to manage our program in terms of our reports and records, these are the can't miss documents. So we need those documents to make sure that we have everything necessary in order to get started to ensure that we provide for high quality program services. Now, on the right-hand side here, the grantee, the SF-425 cash and SF-425 outlay and expenditure report, those are grantee-only reports. However, I do want to make you aware, the agencies out there that are aware that their report can only be as accurate, timely, and complete as the information that you provide to them. So because you are doing the work for the grantee and you're accounting for cash, you're accounting for expenditures, and once that's submitted to them, then they do the report to the federal government. Your role in this process is just as critical as the grantee, simply because of the fact that the information that you provide for must be aggregated and included in the reports that the grantee is required to submit to the federal government. Some of the other records here that you want to be mindful of, and you notice you see some of the fun in red. We kind of put those out there to make absolutely sure that those are, not that they are more important, but they are very, very important than maybe the ones that are not in red. So all of them are important, but we just wanted to give you a heightened sense of the urgency with the information that's in red. Some of the other records are, again, the obligations. We talked about procedures earlier in Section 1 that dealt with the obligation of costs. Ladies and gentlemen, you're going to have to prove it. You can have the procedures all you want, but the rubber's going to meet the road is where the records that are proved, that shows that the procedures are being followed. So certainly you want to make sure that and you will obligate costs, you want to make sure that the records are there to support those obligations. If there is an unobligated balance at the end of the contract period, then the records ought to be very clear about what cost was unobligated at the end of the period in which we obligate. At the top up there where it says Roman number B3, it says USDA financial reports, including monitoring report by the state agencies. USDA has really, Head Start has really married USDA here in the last couple of years. And now the fiscal monitor is required to review the agency's USDA monitoring report. The reason for that is, as you all are aware, one of the criteria for redesignation under the Section 1307 is that if you've been disqualified from USDA, and of course we know that disqualifications could result as a result of disallowances of cost charged to the program. So now they want fiscal to be very involved in looking at that report to make sure that if there are, there's disallowances and not just disallowances, but if there's anything pertaining to the fiscal piece of the USDA program, that the fiscal unit is addressing those concerns. So they'll be asking you, because the protocol does require them to look at the USDA monitoring report. Now, I do want to caution you very carefully about that. If your USDA monitoring report, as you'll see a little bit later on, requires corrective action, then you need to follow the requirements for corrective action and ensure that they are complete and correct. For those of you who are involved with contracted providers that are serving Head Start or early Head Start children, you need to pay very close attention to their USDA report, because their USDA reimbursement is being used to provide the nutrition program for those children enrolled in the early Head Start and early Head Start program. Therefore, what happens to them happens to your organization, because they are providing services to those children. And you need to follow and monitor those reports and hold them to the same accountability in terms of addressing any findings or concerns in a systematic way as if the grantee would hold you accountable in your situation. So you want to make sure of that, and they're looking closely at USDA. This question has only been on the protocol now for the last 2 years. So it is a relatively new question, but it is a legitimate question simply because Head Start is required to use USDA resources as the primary source of meal service for children enrolled in the Head Start and early Head Start program. Records. You want to make absolutely sure that, of course, your liability records, if you have any kind of loans or accounts payable, mortgages, that they're available. You want to make sure that your revenue records, your cash receipts, in case of the grantee, your drawdown records, your electronic credits, rebates, refunds, and disbursements. And I want to caution you very carefully about credits. Credits should also be recorded in the accounting system for whatever they are. If it's a refund, rebate, or any other type of credit in which you have dispersed funds for, those need to be documented in the accounting system with records and reported to the grantee so that they can make the necessary offsets to the resources being provided for in the contract. Your outlay and expenditure records, whether or not you're on the cash or the accrual basis, is the organization's choice, so you'll either be on one of the two. So your expenditure records, not the reports, will be available to show that you can reconcile to all the amount of expenditures by federal, non-federal, and USDA within the program. We want to caution you about the delegate agency reconciliation in terms of the vouchers. The vouchers that you submit for your reimbursement at the delegate agency level has to reconcile to the information in the financial records, in your general ledger for your receipts and disbursement and perhaps your expenditures that you are going to use as the basis for those vouchers. So you want to make absolutely sure that there is a reconciliation between the voucher, the financial records, individual financial records that's used to complete the vouchers, your general ledger, your general ledger reports that identify your receipt of cash, your disbursement, as well as the expenditures. You also want to be mindful of the fact that, and we added one here that says GAAP financial reports, because this is more of a board requirement in terms of what they're supposed to do in terms of reconciling the financial reports to the audit. At the end of your fiscal year, each of your organizations, prior to completion of the audit, should be, based on GAAP, the generally accepted accounting principles, developing or providing for the following statements: your statement of financial position, your balance sheet, your statement of activities, your statement of cash flow, and your statement of functional expenses. Now, the governing board is supposed to use that and compare that to what those records are in the audit to see if what's in the accounting system is consistent with what the auditor has audited for that period of time. You want to make sure that your general ledger revenue reports include cash receipts as well as cash disbursements. So from your general ledger for Head Start, all the cash that's been received by your organization and all the cash that's been dispersed, that you can generate that report directly from your accounting system that will provide for that information. Again, we already talked about interest, so you want to make sure that if there's interest, especially if there's interest earned on federal funds or credits or rebates, that the accounting system is set up to record that information from the records so they can quickly be reported to your the grantee agency so it can be accounted for according to the grant. Your non-federal share records, including cash and in-kind records, need to be available. You want to identify the source of funding on the non-federal share records, if it's cash, and whether or not it can be used as cash match to the program. So if you're receiving any cash or other grants or contracts from another organization, you need this type of information to support the use of that money as a match to the Head Start program. It has to show clearly that it can be used, or if it's a federal source of funding, it will identify it can be used to match another federal fund. Your general ledger expenditure reports include federal, non-federal, USDA, unobligated balances, and just giving you some of the things that would need to be available to ensure that you met those requirements for accounting for your expenditures in the reports during the particular reporting period. And of course, your other reports such as your 941s, your 990s if applicable, would also need to be made available. The other records here is the USDA financial records, including corrective action. We talked about that a little bit earlier in this particular section, but certainly we want to make absolutely sure that if there is a USDA finding in terms of the monitoring that they do every 3 years, that we maintain the records of the corrective action plan, and that we also show the documentation to support whether or not the findings have been corrected. In other words, you want to make sure that all documentation that has been provided for to address the deficiency in finding, that we have that documentation and it says it has been appropriately corrected in that particular area. On the report side, monthly financial reports. These are the reports that you'll be providing to your staff, to your board, and the governing, staff, your board, and your policy council / policy committee. And they will include reports that address revenue as well as disbursements, and they will also address expenditures from a budget to actual perspective. You want to make sure that they understand where we are with administrative costs, how much USDA received, where we are with our non-federal share, and if my organization is bringing in additional resources that's used in the provision of Head Start services, the progress and the use of those resources should also be provided for in that monthly financial statement to the staff, the board of directors, as well as the policy council and policy committee. So you want to make sure that those things are in place. The next section here deals with procurement. And I want to deal with looking at what's required of us in this particular area, because everything that we do, if it's not an employee, if it's a non-personnel cost, it has to go through some type of procurement in order to be accounted for in the program. So they'll be checking records, they'll be checking systems for procurement. In this particular question, this particular compliance measure, it says the grantee implemented procurement procedures that meet at a minimum all requirements specified in the applicable federal, state, and local statutes, regulations, and administrative rules for federal grants, including a written code or standard of conduct governing the performance of its employees engaged in the award and administration of contract. The grantee can demonstrate that contractual agreements were met. And these are some of the records and reports that we've identified that would be needed in order to address the this particular section. One of the sections, of course, will be your procurement policies and procedures. And we refer back to the very first section of the training that talked about the fiscal manual. And of course, normally the procurement policies and procedures are included in the fiscal manual. So you want to make sure that your procurement policies and procedures meet the requirements as they identified in the compliance measure in terms of all applicable federal, state, and local statutes, as well as regulations, administrative rules applicable to the federal grants in which you're in, in this case, the SR grant that you're implementing. So not only do you want to have procurement policies and procedures, you want to make sure that they meet the requirements as listed here. The fiscal code of conduct, we're not sure where you house that document. Some organizations include the fiscal code of conduct in their fiscal policies and procedures. Some organizations may include it in their human resources procedures or their personnel policies and procedures. Strictly that of the responsibility of the organization to identify those. The key is it has to be available for this particular question, whether it's going to be in personnel or whether it's going to be in your fiscal policies and procedures. Your contract policies and procedures. This is one here that's looked at very closely now. They'll do a few tests here. They'll test the contracts for whether or not you have a complete contract that meets all the requirements. Your procedures should very clearly identify what's necessary in the contract. And for certain contracts, they may ask you for documentation to support that the agreement were met. In other words, there may be a threshold in which after that threshold your procedures require you to do some type of contractual evaluation or contractual analysis to determine whether or not the contract have been met. Generally that occurs, from a general perspective, that will occur if the contract exceeds a threshold of $25,000 during your contract period. I want to be mindful of the fact that all agreements that are non-personnel or contractual nature, and that does include the auditor, that does include anyone who's performing Davis-Bacon. So you certainly want to make absolutely sure that if you had, and you will have an audit contract, that there is a contract that's in place to support what the auditor will do. The other thing that contracts, they may ask you about is if the contract is in excess of $25,000, if you have done what they call a debarment or suspension check, either the contract requiring the contract to provide you records that they are not debarred or suspended, or you as the organization would make that decision based on what the data you collected from the Systems for Award Management website, better known as the SAMS website, to determine that particular vendor is not debarred or suspended. So you want to make sure that those records are available in terms of those particular areas. Some of the other records would be available is the basis for contractor selection, including justification if there's a lack of competition, open and free competition on the part of procurements for goods and services, and a analysis of lease and purchase alternates if those particular goods can be leased as opposed to purchased. At what point did you do the analysis of lease versus purchase in order to make the decision about the area of the contract? Records to support a cost of price analysis in terms of every contract procurement, or every procurement must be made available. A cost of price analysis is done whether or not you have open and free competition or not. That's something that needs to be identified in the records and attached to those procurements to show that you have done that. If you're talking about a situation where we are working on a facility improvement, and the facility improvement is in excess of $100,000. Of course, you're expected to have records to support the performance as well as a payment bond that's going to be necessary for that to meet those requirements. Okay. And this is just an overview of what the procurement piece would have done in terms of those areas. We've already talked about that particular area. I'm going the wrong way. Hold on. Okay. Okay. I'm back here. The next piece here that we want to look at is under the records, records to support procurements of $25,000 or more. We've kind of talked about those already, being that they would have to be a debarment and suspension check. And you notice here we've included the regulations that would be applicable to that particular piece, and that's 45 CFR Part 76. And the HHS grants policy statement requires that if a contract exceeds $25,000 or more with a vendor, contractor or vendors, that you must do or have them do a debarment and suspension check in terms of those records. You're also going to need records to support the awarding of goods and services. In other words, whatever you obtain and whatever you've evaluated to make that decision in terms of awarding a contract for goods and services to a particular vendor, the records need to be available. They're going to ask you perhaps for a listing of your procurement transactions, and they may select 2 or 3 from that list. And if so, they're going to expect to see records that you have made the decision based on sound information that you received from those particular vendors. They will probably ask you for a list of all contracts, include purchase orders that you provided for during the period in which is being asked for. They may ask you again for all the vendors. I'm going to say have all vendor contracts available, because based on the list, they will probably randomly select some of those contracts and say, give me the actual contracts. If you have done a contractor's evaluation, if applicable, and again, that is a procedural issue, which should be considered if the contract exceeds $25,000 or more. They'll look at the procedure, and if it requires an evaluation to be done at $25,000 or more, whatever the threshold you set in your own policies and procedures, then they will ask you to show the records for that particular procurement. Now, let's move to the biggest part of the monitoring, which of course is compensation. And we all know that compensation is the largest part of your contract. It represents compensation represents approximately 80% of the resources that you receive from the Head Start and Early Head Start program. And so they're going to pay very close attention to this particular area simply because of the need to ensure that those resources are being used to ensure Head Start program objectives are met. The statement here on the compensation is that compensation addresses, first of all, compensation addresses 2 areas. It addresses salaries and it addresses fringe benefits. And when they start using the word reasonable and necessary, they're talking about a combination of both. So you want to make absolutely sure that records in your organization provide for that the compensation that you're providing to your employees within the program addresses not only the salary side of it, but it also addresses the fringe benefits that you're providing to the employees within your program. So this indicator will say that the program ensures that salaries charged to the award are reasonable and necessary for the accomplishment of program objectives and are allocated to the grant in relationship to the relative benefit received. The program must also be able to provide documentation of all salaries charged to the award. So I want to break this down into 2 areas. Number 1, that they're looking closely for whatever salaries charged to this award, that they are reasonable and that they are necessary for accomplishment of the program objectives. So there has to be a relationship between the salaries charged and the program objectives. And that relationship will occur certainly looking at the job descriptions of each employee in the Head Start program. If the position that we're talking about here, the job description does not identify an activity necessary to accomplish that program objective, then the question of reasonable and necessary can be asked. Therefore, your job descriptions must be very specific to the job or the functions of the employee, and they must relate directly to the objectives in which you're trying to accomplish. So if I have a teacher, of course, and that teacher's responsibility is to provide for educational services or provide for school readiness, the accomplishment of the school readiness goals, in order for that teacher to be charged to the Head Start program, the job description of that individual would need to indicate some functions associated with the accomplishment of the school readiness goals. And it's just as simple for every single position that's going to be charged whole or in part to the program. The other thing here is it says here in relationship to the relative benefit received, meaning that if I am allocating cost, the Head Start program is only going to be charged, the Head Start award is only going to be charged based on the portion of the benefit received from the charging of that cost. For example, if I'm working in the Head Start program today for 4 hours and I do only Head Start and I don't do any other program and I'm allocated, then Head Start receives the benefit of that cost. Therefore, Head Start pays the cost. If I'm working in 2 programs today and my cost allocation is 50-50, and I work in child care for 6 hours and in Head Start for 2 hours, then child care should pay me for 6 hours because the benefit was received by child care for 6 hours and not 2 hours, even though my allocation method was 50-50. In other words, it could have been 4 and 4. But because I actually received the benefit, because the program that child care received the benefit of my services, then child care should be paying me for that service for that period of time. And therefore, it shows clearly that the award is only being charged for the portion of the time in which the program received the benefit. Documentation. The program must be able to document all salaries charged. And it doesn't matter whether you're a professional, a non-professional, you must have some source of documentation to support the salary being charged, whether it's whole or in part to the Head Start program. So certainly you want to make absolutely sure that we'll talk about some of the records in a few minutes that will be applicable to this particular area. But you want to be sure that everyone's salary clearly shows that they are being charged, including those that are cost allocated to the program based on the relative benefit received to that particular program. Okay, the first compliance measure here is in this section is what we call original time records are prepared and properly signed by the individual employee and approved by a responsible supervisory official, and an appropriate methodology was used to allocate salaries among Head Start and other programs. Now, again, starting with our records, we're going to look at some of the records here that will be applicable to ensuring that we have systems in place for compensation that provides for the accomplishment of the objective in this area. The first set of records, of course, is going to be your payroll procedures. The payroll procedures, in terms of documenting payroll, has to be based on after-the-fact activities, not the plan, but after the fact. In other words, the service is provided and it's documented after the service is provided. The system must address the signing of the timesheets, time cards, personnel activity reports, either by the employee as well as the supervisor. The system has to address the approval of the payroll by a responsible official who has been assigned that particular responsibility. It has to also address how the payroll is processed and how the payroll is dispersed. Now, I do want to go fast forward just for a second here to show you. No, I don't. I'm going back. I'm sorry. Public service announcement here. I'm going to, okay, previous. We'll be through in just a second. Okay. Just a second. Okay. Okay. Okay, yeah, it has to be approved by a responsible official of the organization, and the procedures must also address the disbursement of the payroll. The other records here is that the procedures for allocating positions within multiple programs, there needs to be a systematic procedure, and I'm not sure if that, again, is would probably be a part of your fiscal manual that it would address for the allocations of positions in multiple programs. You would also need records to show that the methodologies that you're going to use to allocate the cost of personnel costs, whether, for example, it's the number of children, whether it's the number of staff, whatever reason or rationale that you use for allocation, then the records need to reflect those. Some of the records here that, of course, you'll need to have signed is, of course, your time and attendance reports. For example, time cards, time sheets, your summary reports, or other documentation. You want to make absolutely sure that you have your personnel activity reports, including support documentation or reports uncompleted after each activity. And that's important too, because timeliness of personnel activity reports, because we're talking about documentation in multiple programs. If you are not completing the activity on your personnel activity report immediately after, if the system doesn't require you to complete the activity immediately after completing it, then you need perhaps some other record to show what you used to complete it at the end of the day, maybe at the end of the pay period, that shows that you actually performed work in those programs. Some of the other records that's going to be needed in this particular section, of course, will be the job description, the organizational structure, classroom rosters, for example, list of programs served by the agencies to ensure that they have information that support the allocation of costs. The GABA detail report is also important because of the fact that it does identify the percentage of salaries in the Head Start and Early Head Start program, as well as the grant application reports would also be necessary in this particular area. The next set of questions here is probably not going to be applicable to anyone, but they're in the protocol. And this is the section that deals with compensation that's going to exceed the executive level 2, which is for the calendar year ending 2012 is $179,700. I'm not going to spend a whole lot of time in this area because I don't think this would be applicable. If it is to your organization, very straightforward. You will need, if applicable, a copy of IRS 990. If that's not something your organization is required to do, then you'll certainly need a copy of your W-2 statements for that individual and the filing year ending payroll register for the year. Now, this information here is not based on the contract period. It is a fiscal year. In other words, a January through December year. That's why they're asking for the W-2s and your final end of the year payroll register. Of course, then, if that's applicable to your organization and you may be at, I won't say at risk, but you may have staff who may be in this area, they also are going to want to see records where you identify the compensation to the Head Start program, whether it was chargeable to the federal, indirect, or the non-federal share. The next section that we want to address is the total compensation for personnel services, including employee wages and incentives, compensation charged to the grant, allowable and reasonable. Now, the first set of records that you will need to have is a policy that deals with compensation. The policy in your fiscal manual or whatever manual that you identify, which hopefully is the fiscal manual, should address salaries and fringe benefits that are being provided to your staff, include incentives and bonuses if applicable. So if you provide any kind of bonuses or incentives to your staff, your compensation policy should have the policies and procedures that address those particular areas. The next set of records that will be necessary will be the wage comparability study. You will need wage comparability study. The standards does not say the frequency for the wage comparability study, except for the fact that whatever compensation that you're providing for to your employees will not exceed the most recent wage comparability study. And when we say compensation, we're not just talking about salaries, we're talking about salaries as well as fringe benefits. The next document for you to have within your program is what we call a salary schedule. The salary schedule is the link between the wage comparability study and what you are actually providing to your employees. So the reviewer could say, give me the wage comparability study, give me a salary schedule, and give me a listing of your salaries from your payroll system. They should all reconcile. They should all be in line, meaning that the wage comparability study salaries should be consistent with those in the wage salary schedule, and certainly the salary schedule will be consistent with the payroll report that identifies salaries by employees. So you want to make sure that that the three reconcile, and that does include fringe benefits. I think we had a COLA in the last 3 years, so make sure that you have those records available for that period of time, because remember, we're going back to the current and prior year and perhaps even the third year, so those records would be available. If your organization is perhaps involved in some kind of labor agreement that requires incentive compensations, please make sure that the agreement that addresses the compensation is available, because the reviewer will need to test that as part of the section here under the compensation for personal services. Okay, section number 5, which is the section that's going to deal with the cost principles. The program ensures all costs, direct, indirect, federal, and non-federal, charged to the grant award meets the standard of reliability specified in the federal cost principles. Now, this section will deal with all costs having tested for allocability, reasonableness, and allowability of costs. It will also test your non-federal share. We'll talk a little bit about non-federal share. And it will test whether or not your organization has obligated costs to your contract as well as the grant for the provision of Head Start and Early Head Start services. So the first set of questions here deals with the grantee has implemented procedures to determine allowability, allocability, and the reasonableness of costs charged against the Head Start and Early Head Start grant awards as required by the applicable cost principles. If the grantee is required to allocate costs between funding sources, and that does include Head Start and Early Head Start awards, the program utilizes methodologies for allocating costs that reflect the relative degree of benefit for each program receiving the benefit of the allocated cost. So in other words, in this particular section here, they're going to test allowability, allocability, and reasonable costs. And they're also going to test cost allocation, but not from the personnel side. They've already tested from the personnel side in the prior set of compliance measures. They'll be testing it for non-personnel costs to see if those costs are also being appropriately allocated to the program. So the first set of records here would be policies and procedures. Now, the regulations specifically require that if you are an agency that's the administrative requirements are under Part 74, that your agency must have policies and written policies and procedures. Now, Part 92, it doesn't specifically say that, so for those organizations that are Part 92, it doesn't say specifically in writing, but it would be kind of difficult to implement something if you didn't have written policies and procedures to follow in terms of carrying out implementation consistently across the board. So the best practice is that you have written policies and procedures for determining allowability, allocability, and reasonable costs, regardless of whether you are a Part 74 agency or you are a Part 92 agency. Policies and procedures for journal entries, including approvals. So if you do use a journal entry system, and sometime you would have to do so if it's no more than correcting an error, you would have to use a journal entry system to do so. You need policies and procedures, and you need to ensure that the policies and procedures are being followed by providing for the records to support those policies and procedures. Again, as I said in Section 1 and Section 2, the reference then is the Fiscal Policies and Procedures Manual. The cost allocation system, and we put in parentheses plan because in this year's monitoring protocol, they don't specifically ask for a cost allocation plan. They do want to know the system that you use to allocate the cost, which of course would have to be documented, and that does include methodologies that were used in order to determine budgeted costs and that are being followed throughout the course of the contract or grant period. Now, the other thing too is that these things need to be current. So if you have a cost allocation system and you have not looked at it in a year, you need to look at it closely to ensure that whatever methodologies that you're currently using are still applicable now, because the expectation is that this is to be a current system and it's a current process. So, you know, you're getting the best bang for the buck in terms of the allocation of the cost that you are providing for within the program. Because space also has to be allocated as part of the records. If you're sharing space, certainly you want to provide something to show that the space, what program is sharing what portion of the space. So you may provide a map or some other mechanism that identifies a portion of the building allocable to Head Start as determined by the lease and or agency on space. So certainly you want to have something to show that Head Start occupies this portion of space if that's something that's been allocated in the program to give us a basis to determine the cost. You do want records that support the allowability, reasonableness, necessary, and allocability of costs charged to the Head Start program. So again, we just don't charge costs. Once we make the decision to charge the cost, there has to be records to support that we've determined that the cost is allocable, that the cost is reasonable, and the cost is necessary to be charged to the Head Start program. And they'll test those records in this particular area. Your records of approved journal entries include the posting of those journal entries will need to be provided for, and of course your general ledger journal entry detail reports, so that they can take the detail report and they can ask you to approve the records of the journal entries to see if they'll be testing for approval. They'll be testing for to ensure that there's a segregation of duties, that the person who approved the journal entry is not the same person who is of course making the journal entries. So they'll be looking at it from those perspectives in terms of those records in an effort to respond to the compliance measure here in this particular area of the protocol. The next section here is indirect cost charged or supported by the negotiated and approved indirect cost rate. This will probably only be applicable to the grantee. So for the grantee, the records would be necessary for the indirect costs would be the current negotiated indirect cost rate, the notice of grant awards, which of course they'll have available that shows how much indirect cost was budgeted for, and of course the indirect cost budget that identifies the portion of the funds that are indirect costs for the Head Start program. In addition, some of the other records would be the 425s that shows the amount of indirect costs being reported to the feds on the final report, and also the fiscal records from the grantee's perspective that will identify the indirect cost charge and the direct administrative costs, because the grantee would, if they have an indirect cost rate, there's still a possibility to have direct administrative costs, so the records need to show the difference between the two. And then, of course, there will be the reports that would show the same information from a accounting system perspective. Okay. The next set is our non-federal share. The non-federal share in the monitoring protocol for 2014 has taken on a very, very straightforward situation, just like the federal share in terms of its accountability. They expect you to budget for your non-federal share. They expect you to follow the budget for your non-federal share. And they expect the non-federal share to be necessary for accomplishing the objectives in which the non-federal share will be used for. There's no such thing as finding non-federal share. non-federal shares of budgeted costs. Until you change the budget, then you document the non-federal share consistent with the budget. And this question does test those elements in terms of what's going to be required. Okay, the question says in 5.3, the grantee can demonstrate that all contributions of non-federal share, including cash and third-party in-kind, such as donated services, goods, or supplies, are necessary and reasonable for accomplishing program objectives, allowable under the applicable cost principles, and allocable if also benefiting another award. Financial records are also sufficient and support the verification of adherence to applicable cost principles. So they're gonna do a lot of testing based on the records that you're going to provide for them in this particular section. The key, make this about policies and procedures. You need policies and procedures for documenting non-federal share, whether it's cash and in-kind. And those procedures need to address valuing goods, services, and space. How do you value your goods that you're going to receive, such as your supplies? How you value your services, such as your volunteers or your contractual services? And how you volunteer your space, such as your third-party space or the space owned by the agency. These policies and procedures should be very, very specific to how that information will be determined and how they will be recorded within the accounting system. You're also going to need policies and procedures for determining whether or not the non-federal share is allowable, allocable, and reasonable. And again, we just got through talking about in section 5.1, the very same test in terms of policies and procedures. Then certainly if you're applying those very same tests to your federal share, then certainly you want to make sure that these same policies and procedures are applied to your non-federal share. To get this thing started in terms of some of the records, you're going to have the application. The application identifies all your non-federal share that you are supposed to document during the grant period or the contract period. And the GABI will also provide for that same information so that we start out with the application and the GABI and we do it according to what you've included within your application. The operating budget, which is the budget that's done after the application has been approved, would then specifically identify what services based on the goods and services and supplies that you will be documenting throughout the course of the budget period as non-federal share. You always want to follow what you are already have in place to follow in terms of your non-federal share. If your organization is using space as non-federal share, you're going to have what they call a current appraisal. Now this means a couple things. This means that your appraisal would be if you're paying a portion of it in federal funds and you're receiving a portion of it in non-federal funds, you will still need an appraisal performed by a licensed independent appraiser. And they give you some example here, e.g. a certified real property appraiser or a GSA representative indicating the value of the space at the time that you are trying to document it as non-federal share. And it must be certified. So once you get the appraisal, if this is something that you account as non-federal share, you must have a certification by a responsible official of the organization that the donated space can be counted based on an appraisal. So you need two things here if you're using third-party space, and that's any third-party space that's being counted as match. You need the current appraisals. They don't define current appraisals, but I would assume something within a reasonable period of time, 3 to 5 years. And you need a certification, you need the certification by a responsible official organization indicating space. Now, for other space, for example, family homes or occasional space rental, that does not require an appraisal. Well, as you can see in the next step here, what you need to have in order to support that type of space. So if we're talking about the bigger buildings, you've got to have an appraisal. If it's a non-federal share going to be counted, it must be certified. For the family homes, if you have a home-based program in which they are counted, non-federal share in the home, or if you go out and occasionally rent some space for a meeting or something, you do not have to have an appraisal. But it does require you to have some evaluations. You just can't just count what the vendor says would be the space. So if you look at number 6 here, it says records to support space in family homes or occasional space rentals. You probably need a market survey or something, some other records where you've actually compared the cost of the space. So you can't just say, okay, I'm going to count whatever you say the space is worth. You're going to have to do some research or some work to make sure that the space is adequately being counted for the purpose in which it's intended. So the records need to indicate that. Cash match. If you're receiving cash match from another agency, state, local government, you must establish whether or not the funds come from the federal government under another award. Now the records have to indicate that if you're receiving it from a state or local government and you need something to say it did or it didn't. If it did come from the federal through pass through to that agency, for whether it's state or federal, local, then you need something to say that the money is authorized by federal statute to be used as match. In other words, you need something to say that I can claim this as match if it's being paid for by another federal agency. And that would probably come through the federal statute or the authorization from that source of funding that would say so. Or you also need to show that if it was not used as match and it comes from a state or local government agency, that the fund is not being used to match another federal award. And sometimes what they'll do is they'll give you another pot of money from a state or local government agency, but it may not be the federal portion, or a portion of it may be federal and a portion of it may be their state or local money. But if it's used as match, if that portion is used as match to the federal, then of course you can't count that as match to the Head Start and Early Head Start program. The other records that you're going to need here is you're going to need the Head Start salary schedule, because when you start testing the services in terms of whether or not the rate is reasonable, certainly they want to look at the salary schedule for the Head Start program to see if the positions that are identified in the Head Start program, that the salary schedules for the positions being counted as non-federal share are consistent. They will need to see the wage comparability study in the event that some of the services provided by volunteers or third-party providers are not identified on your organizational structure, and therefore may not be a part of your salary schedule, but then will need to be included in your wage comparability study for that particular position within the program. They will need to see records of the non-federal share consistent with the application. In other words, and the operating budget. So again, they're going to take, as we said earlier, they're going to take the application, they're going to take the operating budget, and they're going to see how you have the volunteer services set up. They're going to see how you have the supplies set up in the system. They're going to see how you have equipment if that's budgeted for, and they're also going to look at space. And they're going to look to see if the records are consistent with what you budgeted for, because the volunteer or non-federal share is a budgeted cost, meaning that you follow the budget with your non-federal share just like you do your federal share. They'll just simply be comparing the two. They'll see that you indicated, for example, I'm required to have $100,000 in volunteer services, and they'll look for the records to support $100,000. So you need to be mindful of the fact that whatever you included in your application for funding in your operating budget, that is the basis for the non-federal share in which they will be verifying in terms of the monitoring, because that was determined by your organization as the non-federal share that was necessary and reasonable for accomplishing the program objectives. Now, of course, if there's a change to the budget, records will also indicate the change and how the change was made in terms of the impact on the operating budget. For cash, cash will be treated just like the cash being charged or the federal funds being charged to the program. The records would need to indicate that the cash was received and the cash was dispersed. Now, I want to caution you on the cash, because the cash receipt doesn't mean that you can count it as non-federal share. You cannot count it as non-federal share until you disperse it for goods and services. just like you do the federal share. So don't get caught up with the records posting only my cash receipts and not posting disbursements. And if you don't disperse it, then it can't count. For example, to give you an example of that transaction, if I receive $10,000 in cash during the course of a contract period, but I only disperse $5,000 based on the records, then I only have $5,000 in non-federal share that I can count because I did not disperse the entire $10,000. Receipts doesn't count as non-federal share. It's only cash disbursement, so be very mindful of that. You're probably not going to have a waiver unless the city has given you a waiver through their system. So if they did, of course, then of course you want to make sure you have those records available. And if the city is asking for a waiver from the federal government, of course, they would have the documents available for that particular area also. The next question, it says question 5.4, or compliance measure 5.4 in this case. This is a relatively new question. It's only 2 years old. It wasn't a part of the last triennial monitoring that you had in terms of your review. And now they're looking more to make absolutely sure that we have records that provide us with reasonable assurance that only charges being charged to the award is charges that are actually being obligated. And I'll talk a little bit about this in the records in just a second. The compliance measure said during each funding period reviewed, and it says each funding period reviewed. That means it could be current, prior, or the year before, which is the third year. The grantee charge to the award only costs resulting from obligations incurred during the funding period. Now, as I said a few minutes ago, in order to prove that, you must have records and reports of obligations. So you want to make absolutely sure that you look very close at the two sections here for records and reports. So you want to make absolutely positively sure that you have records of your obligations and you have reports that you can generate to show your obligations. I'll show you in just a second. Under the records section, there are two areas that you want to make sure that's addressed. I'm going to take number 2 first. Policies and procedures for obligating costs and posting costs. We need policies and procedures for how you obligate all personnel and non-personnel costs because it has to be obligated prior to the close of the grant period in order to be charged to that particular grant period. Okay, for example, records to support the posting of obligations to the general ledger, federal, non-federal, cash, in-kind, if applicable, USDA, and others. There has to be records issued that someone has approved to say that an employee or system can be charged on the Head Start for that particular cost. So the records have to, for example, the city's grant period ends November 30th, which means that all costs charged to the grant period has to be obligated by midnight on November the 30th. Now, you have a situation where obligations can be liquidated within the time frame. I think the city gives you, I'm not sure if it's 30 days or 45 days to liquidate the obligations that you have incurred as of that year, November the 30th period. But in order to liquidate the obligation, there must be an actual obligation or records to show what the obligations were. So therefore, it tells me I have, as of November the 30th, I have $2,000 in obligations that I'm going to liquidate before I submit my final reimbursement report or whatever you use in order to close out the period. Those records must be available, and certainly from the reporting side, then in the accounting system, it would also have to be available. I want to go back and remind you of, we just got through talking about non-federal share cash. It works the same way with non-federal share cash. So if I have any cash on the non-federal share side that I'm going to use and account for during a period that ends November the 30th, it has to be obligated by November the 30th with records to show what I'm going to do to liquidate that obligation prior to the submission of the final report. This is very important in terms of making absolutely sure that at the end of the contract period that the obligations that I have recorded are going to be equal to or greater than the actual expenditures during the course of the period. That is a test that They begin to perform in monitoring, so you want to make sure you pass the test. That all your obligations, if I add up all obligations based on your contract during that period, that those obligations are going to be equal to or greater than the actual expenditures. The actual expenditures cannot be greater than the obligations because costs must first be obligated, and so the records and reports that we're talking about here in this section would reflect your organization's capacity, both from records as well as your general ledger reports, to show that the obligations are being made and that we're not obligating any cost. We're not expending any cost to the award that was not first obligated. Okay, we are pretty much winding down to the last section here of the protocol. And I want to go through this section because we want to take a little time for questions and answers, and we'll have maybe about 30 to 45 minutes for that. But the last section is facilities and property. We don't anticipate a lot of involvement here in terms of facilities and property because of the fact that this is primarily property and facilities that has a federal interest or it was constructed or purchased with Head Start funds. But we will cover some of the areas because there is a section in here that deals with depreciation and use allowance that we need to talk about, as well as the equipment piece that also needs to be addressed. So in this particular area here, it says here that the program complies with all federal requirements, e.g. adhering to instructions in the application process and providing required documentation to regional offices associated with the purchase, construction, or major renovation of facilities or equipment purchased with a purchase value of at least $25,000 or more. So we want to talk about some of those things here. Now, the first compliance measure is to deal with property, and it says the grantee has established the allowability of the cost for owned or leased facilities and has adequately protected any federal interest in the facilities through the filing of a notice of federal interest, insurance and maintenance of property records, compensation for the use of facilities owned by the grantee or delegate agencies, the grantee, a delegate agency, or other related party, was through depreciation or use allowance based on the cost of the facility, excluding costs paid by Head Start. The grantee obtained advanced regional office permission for any mortgage and loan agreements using collaterally property acquired or subject to major renovations using Head Start funds, and has ensured that the mortgage/loan agreements including the required provisions. And that is a very, very long compliance measure. So let's look at some of the things here that's perhaps going to be applicable to you. If you have a lease, you want to make sure all leases between the grantee and delegate and unrelated party, including affidavits, are available, if that's applicable. If there's some property where a mortgage or loan has been taken out that Head Start is involved in other words, there's some federal funds involved in that, you want to make sure those records are available. You want to make sure that the records for major renovation, construction, purchase, and incidental alteration to facilities, including modular units, are available and that they meet the approval requirements in 1309, including the application and a checklist. And those are some of the things that are required to be provided for in that area. The one that you probably going to be most, have the most, connection to will be the next one here, which is depreciation and use allowance records. If you are charging depreciation and or use allowance for facilities and equipment owned by the grantee or delegate agency, include the acquisition date and the amount of the acquisition and the depreciation schedule. You've got to include those records. The date it was acquired, how much you paid for it when it was acquired, and the depreciation schedule, because those would be the records to support the basis for charging whether it was federal and or non-federal share to the contract and or grant for Head Start and Early Head Start program, for the Head Start and or Early Head Start program. So you want to make sure that the records itself shows when you acquired the building as the agency or the related party, what was the amount at the time it was acquired, and the depreciation schedule. Now, there are some rules about the depreciation in terms of what happened prior to 1986 or after 1986. So you want to make sure that, if you're creating a depreciation schedule, that you consider the Internal Revenue Service's rules when you're creating that depreciation schedule, depending on when you acquired the building. You also want to support records to support the actual charges, not the actual calculation, but something to say that someone, either your agency or the grantee, is either charging a Head Start on the federal side and or on the non-federal side for depreciation or use allowance based on the schedule, depreciation or use allowance schedule. So we need the actual calculation to show here's what the depreciation schedule is, and we also need the records to show that the charges, whether it's federal and our non-federal share, that will allow the organization to charge depreciation and or use allowance to the granted contract. So you want to make sure those records are available. If your facility has a notice of federal interest, and it would have a notice of federal interest if you had purchased, constructed, or done major renovation on the facility using Head Start funding, then you would have a notice of federal interest. Other than that, if it's just minor repairs or work on the facility that does not constitute major renovation, you would not have a notice of federal interest. But if it has a notice of federal interest, that means that you've done construction, purchase, and or major renovation to the facility requiring that you have a notice of federal interest filed. Some of the other records that's going to be tested here is going to be your insurance records. They will test for physical destruction. They will test for flood insurance if applicable. If it's a facility that Head Start has a federal interest in, they will look for a subordinate agreement signed by an official if that's required. If there's a notice of default on the mortgage or security agreement, if applicable, then certainly they'll be asking for those type of records associated with any space on the federal property. Written and telephonic notices to ACF in the event of the default would need to be made available. Certified copies of deeds, leases, loan agreements, mortgages, or just some of the other records that will be needed and tested, if applicable, in terms of this particular question here in terms of compliance measure. Now, the last section here is the section that deals with equipment. And this is a system within the organization that you need to have your equipment records available. This compliance measure says the grantee has safeguarded equipment purchased using Head Start funds by maintaining complete and accurate equipment records, verifying the accuracy of records by conducting a fiscal inventory, and allowing disposal requirements. The grantee obtained advanced regional office permission for any mortgage or loan agreements using real property or equipment acquired with Head Start funds. So from the standpoint of systems, the records here will be more procedural. They will expect to see your equipment management procedure. And I'm sure that, some of you perhaps have a bigger organization. You may have used the term fixed assets. But in this particular section here, we want to deal with the term from the perspective of Head Start equipment with an acquisition cost of $5,000 or more and a 1-year useful life, because that is the you need to be very specific about how you manage that property. Even though you may go a lower threshold, that's fine, but for the property that's going to be acquired whole or in part with Head Start funds with an acquisition cost of $5,000 or more than 1 year useful life, then certainly they want to expect us to provide for records to support that equipment. They also expect your system to include equipment disposal procedures. Generally, those procedures are a part of your procurement procedures, because whenever you dispose of equipment, they want you to ensure that you maximize the price in terms of whether you're getting whether you got the greatest value for the equipment that you are providing for it to be disposed over that period of time. With the equipment, you want to make sure that the records of equipment are maintained and that the following information is maintained in those records. Of course, the description of the equipment. If the equipment has a serial number or other identification number, source of the property, the title holder, all that would be a part of the property records. The acquisition date, the cost of the property, include the unit as well as the total cost, because as you're going to see in just a few minutes, equipment may consist of several pieces and not just be one piece. So with all the units together, it may be more than $5,000, so it meets the definition of equipment, and we'll see that in just a second. percentage of federal participation in the cost, especially that equipment, of course, that's purchased in part with other resources. The records need to identify specifically what portion of it is federal, if it is a federal equipment. And again, the acquisition cost does not mean the acquisition cost of the federal portion. It means the acquisition cost of equipment. So therefore, if the equipment costs $10,000 and Head Start, equipment costs $10,000 and Head Start portion is $1,000, it's still equipment because it did cost $10,000. The location, use, and condition of the property must be kept in the records. So when you look at your property records, you will expect to see the location where it's located, if it's still usable, as well as the condition, and the ultimate disposal data, including the date of disposal and the sale price for any property that has been disposed of that is not outside of the record purging system for the organization, if it's still disposed of. Now, to assist the reviewer in order to identify what records they will need to provide for, you want to provide for an equipment listing. Again, the equipment listing needs to identify whether or not it's Head Start equipment or it's not Head Start. We don't want to confuse the reviewer and give us a big listing of equipment and none of it's Head Start. So the listing needs to identify Head Start equipment. So if they want to pull the records, they can just simply look at the listing and ask you to give you the records, ask for the records for the equipment. Keep in mind, equipment includes both federal and non-federal. So it doesn't matter whether it's being paid for with the federal funds or contributed by a third-party vendor or contributed by someone else. It's still equipment because it meets the definition of equipment. The inventory. The first step in the process is, again, following your equipment procedures, which will specifically identify when the inventory of equipment was done. You will need to show that you've done an inventory according to your procedures. You will need to ensure that the procedures meet the federal regulations for the inventory requirements, and you'll need to ensure that the inventory includes the federal and non-federal equipment that's been provided to given to the Head Start program. I just want to note to you that the acquisition cost of equipment is $5,000 or more and a 1 useful life, which will be under the inventory that will be expected to be provided for in this area. The final step when it comes to safeguarding equipment purchased using Head Start funds is records of equipment inventory reconciliation. The regulations actually doesn't require you to do an inventory once every 2 years. They require you to do a reconciliation to the property records or equipment records once every 2 years. So if you look at the regulations here, you are expected to do an equipment inventory reconciliation to the equipment records. We showed you earlier the list of what's contained in the equipment records. That reconciliation has to be done at least once every 2 years, and they'll want to see records of it. They want to see whether you conducted your inventory and then you came back and took the inventory and you reconciled it to the property records. That is supposed to identify such things such as equipment that needs to be disposed of, equipment that no longer exists, equipment that has been moved or relocated, so you'll have consistency with what's in your inventory and what's in your property records for the equipment. I do want to give you a definition here. We talked about a little earlier, and that definition is acquisition costs. So you'll know exactly what we're dealing with when we talk about the acquisition cost of equipment of $5,000 or more in 1 year useful life. It simply means the net invoice price of the equipment, which includes the cost of modifications, attachments, accessories, auxiliary appurtenances necessary to make the property usable for which it was acquired. So again, you may have situations where you have parts of equipment. You may have something that costs $4,000, but in order for it to be usable, you have to buy something else that's $1,500. And when you add the two together to make the $4,000 part usable, it becomes equipment because it does include, it does meet the threshold of having an acquisition cost of $5,000 more than 1 useful life. Some of the other situations that could affect whether or not the definition of equipment would be other charges, and these are charges that you have to determine within your own policies would be applicable or not applicable, would be the cost of installation, transportation, taxes, duties, or other protective in-service insurance shall be excluded or, shall be included or excluded from the acquisition cost in accordance with the recipient's regular accounting practices. So anything in the other category becomes the decision of your organization. If they're included, that cost is also added to equipment, and therefore the equipment cost, it gives you a greater amount perhaps to be at $5,000 or more. Okay, I think that is the show for me here. I got to get to the questions. The first question here, I'm sure that you can hear me. Does the current and prior year requirements apply to subgrantee who is only awarded in the current year? That's a great question, and the answer is no, because you've only been around, and I understand that there are some of you who are brand new. Since you have not been involved in the Head Start program, and this is a Head Start review for the City of Chicago, then that question, that would not be applicable to you because you've not been a grantee in the past. I mean, sorry, a delegate agency in the past. It will only be applicable to those who have been involved in the Head Start program. Now, they may want to see your audits and some of the broader documents from the prior years. They may just want to look at those because of the situation with the financial management system. But certainly the budgeting pieces and the parts that are applicable directly to the operation of the Head Start program would not be something that would be available by your organization simply because of the fact that you have not participated in the program before. Okay. Any more questions? Okay, any other questions? I don't see no question. One question. Okay. Will the slides be made available? Yes, the slides will be made available.
On Children's Services website.
Yeah.
We'll put the slides up on Children's Services website later on today.
They can hear us, right?
Yeah.
Okay. What's the question?
Did you answer the first one?
Mm-hmm.
Okay, I guess that's the only. You did a great job there.
I thought maybe it'd be more. Maybe, really. Yes. I guess you can just tell them.
If you have any more questions.
Okay. Okay, they're coming in. Ooh, geez. Hey, come here. How you click on them?
Hmm?
David, I can't understand here.
Okay, we can ask them too.
Somebody typed in for the USDA and CACFP.
David.
David.
David, if you can.
Oh, okay.
Oh, okay.
I see. Okay. The next question is, if we submit an expense report, reimbursement, and check is still outstanding after the grant is closed, do we have to return the funds?
That's the next question, I think.
I will refer that question to the finance department and let them respond to that one. Will any additional technical assistance be provided after this training?
what kind of technical assistance are you referring to, Dorothy? Let's go to the next one. Will the link be provided to the slides? Yes. Just go to childrenserviceschicago.com. Is this report annually or semi-annually?
Are we talking about, what are we talking about, David? I still don't know. It's just a question here. I don't know.
Okay. I think you said USDA.
You mean the monitoring report? If you mean the monitoring report, that's normally done once every 3 years. Oh, we go back that one. We show this one.
We can get them on. We can get them on.
Thank you.
Okay, thanks, David. And are we to show disallowances?
No.
Okay.
No. Okay, what else? Okay, what we got here?
Mr. Bailey's on the call?
Yeah.
And I'm just trying to ask a question. Can you call her on her cell phone?
Answer some questions.
Please call her because she's being paranoid. And she said the screen is blank.
Ask about this?
Let's see if and that's
Oh, she's on the webinar. I saw her on there.
Is that her?
Mm-hmm. Jesus Christ, yeah.
Okay, we'll keep answering some questions here. Sam's
Screen show. Okay, Sam's check. Okay, David, that's the Sam's check is just it's more of a practice. We just use that as a best practice. I'm not sure if that's something that you would necessarily have to do. I'm kind of confused on the question, but generally it's done at $25K for a contract.
Hello?
Hi, Vanessa.
Hello?
You fine?
I just wanted, I was trying to get through before, that's all.
Okay. Do you have some words for the audience today?
I just wanted to, again, thank Perry for, such a thorough presentation, and to assure our agencies that, yes, we will be providing them with support. They need to let their needs be known. They can contact us at the office, or they can, will be the smartest thing to do, and then we will be able to channel to consultants and to other support services that we'll have available for them. I think the other important thing I want to that I know Perry has been out to many of the agencies. He's met with many of you one-on-one at your sites. And I think that you can see by the comprehensiveness for all the executive directors out there, program directors, that this is there's a lot of work that has to be done, a lot of things that have to be put in place. When Perry comes, we really expect for people to be there on time, and to respond to his request, because he's there to help you. And any of the other consultants we send out there are there to help you so that we can be in compliance. So I would appreciate it. We are going to start, how shall I say, lowering the hammer down on individuals who don't show up and don't do it, because we don't have time to be playing around. So please make sure that when you are supposed to do something or asked to do something, given instructions, a list of things you have ready, please, please comply.
Thank you for logging on today, and we will see you at the next webinar.